Hey there, it's Brian here with brianchai.com, and in this video I'm going to be going through with you the support and resistance trading strategy that works like a charm in any market that you can think of. It doesn't matter if it's stocks, forex, cryptocurrencies or commodities, they all work. You get to see why support and resistance are some of the most important levels in trading and in investing world. And after going through those pointers, I'll show you practical examples of the trading strategies that use support and resistance. It doesn't matter what kind of trader you are, whether you are a day trader, swing trader, or long-term investor, because practically everyone looks at this support and resistance. It is something that you simply cannot escape. And because everyone is using it, that makes it all the more effective, as they have a high probability of playing out like they should, compared to less common patterns out there. If you haven't already, then please subscribe to my channel and give my video a thumbs up. It doesn't cost you anything at all, but it really helps me out more than you can imagine. In one of my previous videos, I talked about why support and resistance work so well, and it is because of mass psychology. That's the main reason for it, but of course there are other reasons as well. So if you want to check that out, then the link to it will be somewhere in the video or the description below. If you really think about it, support and resistance are one of the easiest methods of trading, but they still work very effectively because it is easy to use, more people use them, and in a way, when you trade them, you have got tons of other traders supporting you as well. Pun totally intended. Because they are going to be trading off those support and resistance levels as well. And when you have more people acting on the same price level, that price is going to hold up much better than other less used strategy like the Williams alligator. Another reason they are so crucial is that these support and resistance levels, they are the foundations for many of the other chart patterns out there. Chart patterns like the double top, head and shoulder, triangles, wedges. They are all extensions of the regular support and resistance, and they form because those support and resistance levels hold. Otherwise, chart patterns wouldn't form. So now that you know support and resistance are the real deal, it is time to move on to the types of support and resistance out there. There are two commonly known types, static levels and dynamic levels. Static support and resistance are price levels that don't change, and these are the ones that are more commonly used because they are easier to spot. Dynamic support and resistance levels are price levels that change over time because they are based on indicators such as moving average, which changes as price changes as well. So the dynamic support today could be different from the dynamic support for tomorrow. Although they are not as frequently used and have many variations depending on which indicator is used, they are still useful because being dynamic means that it changes according to the current market conditions and can provide more immediate feedback on what's going on in the market. Examples of these are Bollinger Bands and moving averages. Alright, so now that you know why they work well and what are the types of support and resistance out there, let's move on to the next part, which is how to actually use them. The first step, how to find and draw support and resistance. This might seem easy, but here are 5 key pointers to remember. Number 1, ask yourself how obvious is the support or resistance, because good support and resistance should be obvious and very easy to spot. If they are not, then they are probably not very good levels anyway, because chances are that if you didn't find them easily, others won't be able to as well. And that means that there won't be as many people paying attention to it and ultimately less people using it. That's not what we want, because we want to be using the support and resistance levels that everyone is using as well. Number 2 is to take note, how did price react after touching that level? Good support and resistance should have price bouncing off it very strongly, otherwise it might not be a very reliable level. Price bouncing off strongly a support level indicates that there are lots of buyers willing to buy at that level, and that makes it a very attractive support in the future. You should be seeing large and long solid green candles which show strength. If you see a short candle with a long wick at the top, then you should be wary of that support level, because that's not how a candle that bounces off a solid support should look like. Number 3 is how many times did price already bounce off it. This one is a bit tricky because initially the levels are stronger when price bounces off it, but when there are too many retests, which is price going back to that level, then it becomes weaker. The rationale is that when price bounces off the support first or second time, the support level becomes obvious and hence stronger because more people sees it. But after too many retests, it means that there's a very strong downward pressure, which is why price kept going back to retest the support. What usually happens is that there will be a consolidation and tightening of range, and you'll see some kind of triangle or wedge forming. And price can break through that support level if there are too many retests and the price doesn't break out of the triangle or wedge to the upside. Pointer number 4 is that support and resistance levels don't have to be absolute and can have a range. This is especially true in volatile or illiquid markets because prices move very quickly when the order book is thin. What this means is that there may not be enough bid orders placed at the support and prices may momentarily drop below it, but when it does, it shoots back up over the support very quickly as well, and you're left with a wick below the support but the body of the candlestick bar above the support. This means that number 1, even though there are not enough bid orders to hold that support level, it is still a very strong support level that buyers are willing to quickly buy up any price below it. Or number 2 is that there are just happen to be very large sell order that ate through all of the bid order, but overall there are still more buyers than sellers in the market at that moment of time. And because of the scenarios that I just mentioned, sometimes you'll see that price sometimes extend just a little bit further out beyond the support and resistance levels. It doesn't mean that those levels are not good, but simply that the price got a little overextended. What you can do is to use a range of price levels instead of a singular price for your support and resistance if you think it is more suitable for whatever you are trading. So instead of a straight horizontal line on the chart, you can use a rectangular zone as your support and resistance instead. Last pointer 5 is that when support are broken, they turn into resistance, and when resistance are broken, they turn into support. The reason for this is because those levels are significant levels that traders are going to be looking at. And because prices reverse at those levels before, traders will be betting that price will reverse again in the future for those levels. So if you see a strong support being broken and price goes below it for a while, you can be sure that price levels will be an important level that many traders are going to be looking at and can be a resistance level in the future when price goes back to revisit it. Okay, so now that we have covered the 5 pointers, let's move on to the second step, which is to actually trade them. There are 2 main ways to trade support and resistance. First would be using them to trade price reversals, and the second would be using them to trade breakouts. Generally, using support and resistance to trade price reversals are safer than using them to trade breakouts because they have a higher chance of the trade working out. Also, they offer a very good risk to reward ratio because you are able to get very good trade entries by putting your orders in the market at the support level before price reaches there. It is a simpler and less stressful method than other methods out there that requires you to make trading decisions on the spot according to how price moves. The rule of thumb is that the better entries you get, the better risk to reward ratio you can achieve because you are able to risk less when you enter in the trade with a good entry, as you can set a tighter stop loss compared to entering into a trade with a not so ideal entry. For breakouts, although they don't happen as often, they offer a very high reward in return because they are usually the start of a new trend, and there can be a lot of profits to be made if it is a long trend and you ride it all the way to the top. But you have to watch out for fake breakouts where price looks like it is breaking out but then reverses back down. A good time to trade breakouts will be in patterns where prices are consolidating, like a wedge or a triangle, because they are more predictable than a normal horizontal support or resistance breakout. If you're just starting out, I would recommend trading price reversals first and try trading breakouts only later when you are more familiar with how prices tend to react. The third step is to set stop loss and take profit. Support and resistance are a great way to enter into the trade because price tend to reverse there, and because of that, they can also be used to set stop losses and take profit targets as well. If you think you found a solid support, you can place your stop loss below the support so that you know if the support doesn't hold, the price will break out and you can safely and quickly exit your trade. For taking profit, you want to set your target before or at the resistance level because price will usually not go past that level. And that is how you trade support and resistance like a pro in any market you want. Remember, the key to making this strategy shine is to find really solid support and resistance. So keep in mind the key pointers we went through earlier, and practice makes perfect. The more you find and draw support and resistance and trade them, the better you'll get at it. A useful tip is to review when the levels hold up and when they don't. From there, you will likely find that there's a certain behavior that whatever you're trading will have, so use that to your advantage. Thank you for watching, and I hope you found this useful. Remember to subscribe to my channel and give the video a thumbs up. Comments down below if you prefer using support and resistance for price reversals or for breakout. Also, click the link in the description below to check out my website where I have a free crypto workshop, Discord trading group with signals, news, alerts, and other cool stuff. So see you in the next video.